Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and uncover what is really going on behind the numbers. Today we are diving into a filing from Air Incorporated, a company you might not know, but one that plays a key role in logistics and air cargo. Get ready. Because we're about to see if their recent financial performance is flying high or feeling the turbulence. And before we dive in, if you appreciate clear and no-nonsense analysis of corporate documents, make sure you are subscribed. This is how we keep this decoder humming. And by the way, our Discord community is linked in the description below, so join the conversation there too. Air Incorporated, or Air as they are known on the stock market, has just released their latest report. This is a snapshot of their financial health and operational status as of February 13th, 2026. Air is involved in a few different areas of the air cargo world. They provide air cargo services and they also lease aircraft and related equipment. Think of it as the backbone that keeps goods moving through the sky. Now, when we look at companies like this, a big question is always about their financial standing. How are they performing in terms of revenue and profits? This report gives us a peek, specifically for the quarter that ended on December 31st, 2025. The filing confirms the date of the report and that it primarily concerns the company's common stock, which is what most people typically think of when they invest in a company. They also mention what are called cumulative capital securities. These are a bit like preferred stock, meaning they have certain rights and often pay a fixed dividend. It's important for understanding the full picture of their financial obligations and how different types of investors are positioned. This specific report is called an 8K. In the corporate world, an 8K is basically an announcement of a significant event that shareholders should know about. In this case, the big news is the release of their quarterly financial results. The company itself, Air Incorporated, based in Delaware, is registered with the SEC under file number 001-35476. Their main operations are run from Charlotte, North Carolina. You can find Air trading on the Nasdaq Capital Market under the ticker symbol AIRT. They also have another security, the Alpha Income Preferred Securities, or AIP, which trades under AirTP on the Nasdaq Global Market. This tells us they have different ways they raise money and structure their investments. The core of this 8K filing, the part that really spells out how the company is doing, falls under item 2.02. This section is dedicated to the company's results of operations and its overall financial condition. So, on February 13th, 2026, Air put out a press release detailing their financial results for the 3 months leading up to December 31st, 2025. This is the information we're here to unpack. Think of this press release as the company's official statement about their performance. And yes, that press release is attached as Exhibit 99.1 to this report. This means everything that follows from the press release is officially part of this filing. Now, let's get to the good stuff, the numbers that tell the real story. While the full press release isn't embedded here in a way we can analyze its numbers directly, we know that the purpose of this filing is to announce those very results. Typically, these announcements would cover revenue, how much profit they made, and possibly key performance indicators for their business segments. For Air since they are in air cargo and leasing, we would be looking for things like the volume of cargo transported, the utilization rates of their leased aircraft, and of course, their bottom line profit or loss. If they reported a significant increase in revenue, for instance, it would suggest strong demand for their air cargo services or successful leasing operations. On the flip side, a decrease in revenue could point to challenges like increased competition, rising fuel costs, or a slowdown in the global economy affecting shipping. When we analyze financial results, it is not just about the headline numbers. We want to understand the trends. Is revenue growing year over year? Is their profit margin expanding or contracting? For a company like Air which operates in a global industry, we'd also consider how international events or trade policies might be impacting their business. For example, if there were supply chain disruptions reported globally, that might actually be a positive for an air cargo company as businesses turn to faster shipping methods. We also look at their expenses. Are they managing costs effectively in the airline and cargo business? Fuel is a massive expense, so if fuel prices have been volatile, it significantly impacts their profitability. We also want to see if they are investing in their fleet or infrastructure. Growth often requires investment, but too much investment without a clear return can strain finances. Let's assume, for the sake of understanding what we'd look for, that the press release indicated a solid revenue growth. This would mean that demand for their services is high and they are successfully capturing that demand. If their net income also increased, and perhaps at a faster rate than revenue, it would suggest improvements in operational efficiency or cost control. This is what Warren Buffett would look for. Consistent profitability and efficient operations. On the other hand, if the company disclosed a decline in revenue, we would then dig into the reasons provided. Are they losing contracts? Is a major client reducing their shipments? Or is it a broader industry downturn if they then reported a net loss? And that loss widened compared to the previous period, that would be a significant red flag. It could mean they are struggling to cover their operational costs and perhaps even their debt obligations. The mention of different classes of securities like common stock and cumulative capital securities is also important. It helps us understand the company's financial structure. Dominance of common stock might indicate a simpler ownership structure, while a lot of preferred securities could mean they have used financing methods that come with fixed obligations. Looking at how the company is managed is crucial too. While this 8K doesn't detail strategic decisions, the financial results are a direct outcome of those decisions. If AirT is reporting strong performance, it implies their strategies for market penetration, fleet management, or customer acquisition are working. If they are struggling, it might suggest a need for a strategic pivot. For instance, they might need to diversify their services, explore new markets, or consolidate operations to become more efficient. Now, digging a bit deeper, even though the numbers aren't directly presented here, it is important to remember what this filing means contextually. These are the official numbers shared with investors and the public. They form the basis for future analysis and investment decisions. Any discrepancies or misleading statements can have serious legal and financial consequences for the company. For AirT Incorporated, their business is inherently tied to the global economy's health and the e-commerce boom. If consumer spending is strong, air cargo demand typically rises. If there are any slowdowns in global trade or manufacturing, it can directly impact their business. So when we look at these financial results, we're not just seeing numbers, we're seeing a reflection of broader economic trends and the company's ability to navigate them. In conclusion, while this particular filing is primarily an announcement that their financial results are out, it sets the stage for a deeper dive into those results. The key takeaway is that AirT Incorporated has reported its financial condition for the quarter ending December 31st, 2025. Investors and analysts will now be scrutinizing the attached press release for details on revenue, profitability, and operational performance. Based on what we know about AirT and the nature of this filing, the company's direction hinges on its ability to adapt to the dynamic air cargo market. Their strengths likely lie in their established operations and potential niche market focus. But they face constant challenges from fuel costs, competition, and global economic shifts. Any significant financial downturn reported would signal a need for strategic reassessment, while strong results would indicate robust execution of their business plan. We will be keeping a close eye on their future filings to see if they are indeed flying high or facing headwinds. Alright, that is our breakdown of AirT's latest report. What is your take on these signals and what they might mean for the company's future? Drop your thoughts in the comments below. If this analysis was valuable and helped you understand what is really going on, hitting that like button really helps us out. And of course, subscribe for more deep dives like this, and don't forget to check out our Discord community in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.